Hey guys, Steve here with the weekend update. I just wanted to do a quick little announcement prior to getting into the video. But I'm actively working on rebranding, I guess, the blog. Really working on the layout a lot and making it more of a service, with some more information. So you can see here, this is just one page that I've developed already that has, all the videos with a little description right on one page, and then you would be able to click on these to go to your respective videos. Let's see if that works. So again, I'm trying to make this into a little bit more of a service for you guys. We're also going to be incorporating, once I figure out the logistics of it, I'm going to be incorporating some e-courses and eventually the membership for the premium access, which would basically give you the strategy sessions, weekend update, and access to the model portfolio. So again, this is just something that I'm going to anticipate rolling out probably the beginning of the year of 2015, obviously. But I think it's going to definitely be more of a help and more of a website than necessarily a blog. I'll still have obviously the blog section where I do some posts. I've kind of gotten away from that recently. I do want to get back into that. But like I said, this would just be a nice rebranding. I think it's a nice clean look. Kind of goes more with the idea of the process we follow. Nice, simple, clean, not too complicated. And like I said, I think offering those e-courses will really give new guys and people that are just starting out some nice material to place their first trade and to do some technical analysis. So I'm going to continue with the videos that I've been doing. They may not be every week as they were. I may save some of those for these e-courses, the ones that I was planning on doing. So with that said, I just wanted to give you a heads up that this was in the works. So if you saw anything crazy on the blog or broke the blog for any reason, it's my fault, and I'm probably doing something behind the scenes, but I'll definitely make sure that all those videos, even if for whatever reason I can't get them on the blog itself, that I'll definitely at least post the YouTube link. So definitely make sure you're following me on YouTube, Twitter, StockTwits, and Google Plus to make sure you're getting all those in case there's an issue down the line. But like I said, just something that I'm working on, just so you're aware of. And if you see a new site one day, that just to be aware that it is coming, and it's something that I'm currently working on. So I think it's a good setup. I think I'm excited for it, and I think it's definitely going to be helpful to you guys. But let's get over to the weekend update right now. Hey guys, Steve here with the weekend update for the weekend of Sunday, August 31st. It's actually today. We're going to go through everything real quick. There's not going to be a lot of new stuff today, just because I think we're at a point where we're just going to kind of let this stuff ride. There's really no issue with the watch list we had from last week, and so all those stocks remain on. There were a couple that broke out that I did take off as far as that goes. So again, not much to be added to. I'm sure there are positions, but the fact is we're not really taking any new positions right now. So there's really no need to spend any more time on adding positions that potentially would trigger an alert for us. So we're going to go through the market real quick. Market really the last 4 or 5 days of the summer basically just moved sideways. That's to be expected on those holiday weeks. If you look at the weekly chart on the S&P, though, it's a nice looking, potential setup here that we came back in to trend line, bounced off of it, and now we're basically pushing new highs. We hit a high of 2,275 last week on the futures. So it looks like new highs for us, which is good for our positions. Of course, rising tide lifts all boats. So, as long as we have the wind at our back, it's going to definitely help the way we're positioned in the portfolio. As far as our positions go themselves, I did adjust the the model portfolio. I adjusted all the stop levels, so this is current. We are going to be raising stops in 2 stocks. We'll go over real quick. And so if you could see here that we have 2 positions that are negative, out of 13, and we have $5,700 in open profit. And right now, you know, where we are compared to where our stops are, we have about $10,800 in risk on the table. So you can see how you're structuring a portfolio based on diversity and based on, you know, the idea of risk to reward, and making sure that our risk coincides with the reward. You know, if this number was like 20,000 and, you know, we didn't have a lot of profit, then that would be a concern to have. But, you know, everything's been performing well. You can see here on the right, these R's, our losses are very small, and we have some larger R winners right now. So we'll see how they close. Of course, you know, that's the determining factor. That's what adjusts our expectancy and our win rate. Because just because they're where they are now doesn't necessarily mean that that's where they're going to end, and that's where we're going to get, you know, closed out of these trades. But, you know, let's go through our trades real quick. Apple just continues to move higher. You know, nothing wrong with this. It looks like, I think they have an event coming up on the 6th or the 9th, next week sometime. It's just I probably announced the new iPhone and potentially the iWatch, so there's definitely been a run up into that. I wouldn't be surprised, as typical with Apple, after that news is released, if we had a pullback in the stock. But for right now, 94.30 is our stop. ADM continues to just consolidate up in this range here, right below 50, you know, between 49 and 50. You know, again, the longer this moves sideways, comes closer to this trend line and allows that 50-day moving average to catch up, the better it is for us. Potentially that would be able to allow us to raise our stop all the way up to 48. Right now, 46.38 is the stop. AMT, this is one that we're going to be raising our stop. We're going to actually raise it to the bottom of this small gap here, so 93.50. And what that does is that takes about $1.50 in risk. I don't know why whenever I try, every time I move the arrow it works. When I do it for you guys, it doesn't work. So we'll adjust the alert on that to 93.50. We'll make this gray to show our progression in our trailing stops. Okay, so you can see where we trailed stops from this breakout to this small little box to this small little box, and now eventually to the bottom of this little gap. We probably could raise it up to, you know, this 94.30, but the 50-day moving average isn't above that level yet, so I wanted to make sure that we're, you know, we would still allow a chance to bounce off that 50-day before triggering our alert. Let's try it one more time. Oh, there it goes. See, I told you. 93.50. All right, so took a little risk off in that. It's been a good trade for us, you know, just moving sideways below that $100 level. I think a breakout over 100 is you know, fairly certain at this point. APD, it really has come back, basically consolidating right here around the 50. You know, best case scenario would be a breakout over this 134.50. That would allow us to move our stop to this 130.110. And then eventually, obviously, the next resistance level would be 136.40. So for right now, everything remains the same in APD, but I'm looking to move the stop hopefully soon to that 131 level. Disney, moving sideways, right in that box. No real level to move stops. Again, I would love to see this just move sideways, hit that trend line, and allow that 50-day moving average to catch up and bounce higher. That would mean we could trail our stop all the way up to 89 and lock in some nice profits. EQR, you know, just coming back, testing that top of the resistance. Stop level is 64, so that would be a break of the channel and of the 50-day moving average. Expedia, you know, just moving back, kind of pulling back towards that trend line. We talked about this, how far and how fast it moved. So, you know, again, if you try to maybe draw a channel on here, you could see that, you know, we're basically at the top of the channel. So next regression would logically be to this 85, 84.50, and then a bounce higher. But on the weekly chart, there's really not much to not like there. So stop still 79.32. I think eventually we can move to 82.50, but we need that 50-day moving average to inch up a little bit. Fidelity coming back in, bouncing a little bit. I think this one's just kind of in no man's land at this point, in all honesty. I think it just has to play itself out. we're here along this trend line, along that 50-day, coming back in. Stop still 54.86. We had a nice breakout. Now it looks like it wants to revert a little bit, but that's to be expected. General Dynamics, we broke out on the 20th. We took the position on the 21st, and it's really just moved sideways since. It's a great looking pattern as far as I'm concerned on the weekly chart. Coming right into that trend line support, bouncing and breaking out from that. So really identifying this low at 114.50 as the stop. And for right now, sitting above 121. Again, this may want to consolidate. I would expect soon to see this 50-day start to turn up, and that would be a real sign that we're starting to move higher. H&R Block, again, we took the position on a break of this downtrend line here. All right, after a nice breakout, we were waiting for a spot to get in. We allowed it to pull back, took the position on the break of the downtrend, and have now broken out above the previous high. So we're basically at new highs. Earnings and dividend coming up on the 4th. So our stop right now 32. So we'll see what happens with earnings and if that causes any significant movement in the stock. Looks like before, again, it's hard to play these, but we got a gap higher, we got a gap lower, we had a crazy day here that finished in the middle of the range. So anything's possible. LUV, Southwest Air, we're going to actually move our stop in this as well, minimal. We're going to move it right to this 28 level. Here we go again. There we go. Okay, so 28 being the bottom of that little pullback there, the lowest close that we've had recently. So with that one, again, taking a little risk off the table, not much, but there's no place at this point that we can move the stop just because of how fast this is run. Again, the longer this moves sideways, the better it is for our position. So new stop is 28. RSG, we moved our stop at 37.50. After this breakout, and now we're consolidating. So again, I think at this point, if we can move sideways, allow this moving average and the trend line to come into play a little bit more, I think that'd be a great setup for a break higher. And the final one, Tesoro, basically pushing new highs. We caught this one on a breakout right back in here in the beginning of August, and it's basically just moved sideways since. We've been able to trail stop up to this 59.08 just because of where how the stock's been moving sideways. Next stop level I see is this 61.79, but I would want to see a breakout over 65 and that 50-day moving average to exceed that's 61.75 level. All right, so let's take a look at the watch list for this week. Again, it remained pretty much the same from last week. We took a few positions off. Again, this is probably the smallest watch list we've had. I think we've progressively gone lower as the weeks have gone on, just because the portfolio is pretty much full. There's 13 positions. We're using 70% margin. So at this point, I don't really want to exceed that. I'm trying to trade it as I would normally. My portfolio, and personally, 70% margin is the highest level that I would ever want to see in a portfolio. I would never want to max out the available cash, just because it doesn't give you a lot of leeway, should something go against you. So again, this is the smallest watch list. We went over our positions. Now let's go over these. We'll go over these quickly. ABT, really just in the middle of the range. You can see that the breakout over 43.10 is really the trigger on this one. AIV, nice looking setup. Okay, you guys, if you've been following along, my bread and butter setup. This is it. Nice tight consolidation, coming back into a trend line over 34.27 is a great setup, because then we're allowed to put our stop right here at 33. Nice tight stop, nice position size, and let's see where that thing can run. APA, really just moving sideways. We identified a new breakout over this 103.40 would be the new trigger. You could see here that we're really just consolidating in this larger range, and on the weekly, we've broken out from this weekly consolidation. Now putting in this small daily consolidation, and again, I've talked about this before, when you break out from a weekly, very typical that you will consolidate on the daily and then have that would be your new trigger to break out. So very rarely will I take a breakout off of a weekly breakout because the stop was going to be too far away. I'd rather see it come up and consolidate and then be able to take that breakout. APC pretty much breaking out, a little bit higher would be ideal, but again, you could see that we've just really moved sideways in this range between 112. Take this off. Between 112 and 105. So again, I think there you could see that there's a nice trend line coming through here. All right, so there's your new setup in APC. Broadcom, this was one of, again, another nice looking setup. I'm looking at something along these as the new trend line. So here we go. I mean, if you wanted to take this position, you could. Again, having that stop under 36.70 would be the, where I would consider to be the area I would know I was wrong. So that's a good setup there. BXP, a little bit of a sloppier setup, but you can see here we kind of broke out. We came back to test trend line. So now I'd be waiting for a breakout over this 123.30. It doesn't look like it's really got a lot of oomph to push through, but you could see here this breakout. I mean, if you took it, that's fine. And your stop is probably down here at this 117.37. But right now, with the pullback, this wouldn't be something I would enter now. I would want to see a breakout over 123.40. CVS, just really consolidating right above this breakout here. I think if you can get a push over this 79.80, you could probably set your stop down here at 76.12. Again, this is one that I'm long in my personal account and have been for a little while now. So it's nice to see it kind of just consolidating right there for me. Dow, again, you could see that it's just really moving sideways within this $4 range or $3 range that it's got going on here. Currently, if it broke out, the stop would be here at 51, and you'd be waiting for a breakout over 54.15. Estee Lauder, again, close to breaking out over 78.84 would be that trigger. Home Depot, this is one that I put on the list. You can see on the weekly chart a real strong setup here. This is one that, of course, looking back, I wish we took a position back here where we had some definable risk. We could have waited for a breakout over 82 and then set a stop here at 77, but we had earnings coming up. It's not our typical setup, or as far as not our typical play to take a position before earnings, and sure enough, it broke out and it's run. Even if we had identified it here, our stop would have been way too wide. We would have been from 88 to 79. Would have been a little bit too wide for us. So right now, what I'm waiting for in Home Depot, if it doesn't look like it's going to happen, but I'm waiting for some consolidation. If we can get a consolidation between, say, 93 and 90, let it move sideways, and then eventually break out again, then it's a little bit more of a definable risk play, and we could have a nice size position. So, with that said, you could see that, there's times that you want to take a position. I mean, trust me, would I love to buy that right now? Absolutely. But the fact is, you got to stick with your plan. The plan does not call for that. That's where you get yourself in trouble, when you kind of trade on emotion that you're missing out on something. So you can't do that. You got to just let it go and accept the fact that you missed it. That's a valid reason, just as much as it is to take a trade. So once you guys can kind of get that under your belt as well, you're going to be a better trader for it. Again, Hess, nice looking setup in my opinion. We're really moving sideways between 96.70 and 150 or 100.50. So again, it's starting to break out. I think if we can get a breakout, that stop would be 97.50. But if you look at the weekly, I mean, nothing not to like about Hess. It's been really just moving up for most of the year. JWN came back, tested that 70.24 level. You saw that it broke down, quickly regained, and now is right below resistance. So let's see how that one plays out. Kroger, again, nice bread and butter setup, very similar to AIV. And Broadcom, really moving sideways into that trend line. Now we're going to start having to watch these earnings, earnings dates and everything like that. So again, if you're new, we do not take a position more than 2 weeks before earnings. So if earnings are within 2 weeks of the time a trade would trigger, we simply take a pass on it. We try not to. We do hold positions through earnings, but we do not take new positions. Do not put on new risk for earnings. So 51 would be the trigger. So breakout over 51, and that means you could probably set your stop down here at 48.80. LRCX really just moving sideways, right below that resistance, kind of pinching off between the trend line and the horizontal resistance. So let's see which one breaks first, if it's the resistance or the trend line. MCK really just consolidating. We're going to remove all these drawings real quick. We'll redraw this. So, this looks to me, you could have something through there and a rectangle, maybe like that. All right. So it looks like your stop level would want to be, your support level would be 186.40, and your breakout would be 195.20. So there's your new trade setup in MCK. MJN, again, just moving sideways, pinching off again between the horizontal resistance and the trend line. So again, see which one breaks first. National Oil Varco, we identified this similar to H&R block trade, where it came right back down to trend line support, 50-day moving average, started to consolidate. We identified it. We said you could take a breakout here at 89 or 83 on the 19th, and then if it broke out again over 86.30, that would be the next stop level for us, or breakout level. Nvidia moving sideways, not much there. 1961 would be the trigger for that. PSX really just at resistance, so let's see if it can push through, or I think from where it's come from, I think some consolidation, maybe a little pullback, and then a breakout would be more realistic. SPG, again, just in that range between 170, 118, and 165. So just a wait and see game on that one. VF Corp did break out last week, came back down to test dividend coming up. This was one that we did not take a position on, but at this point I would probably actually remove it from the watch list, just because of the breakout and the holding of the 63.85 area. WDC is another setup, close to breaking out, if we can get a little bit of a higher push over that 103.50, I think that's a great setup. Even to bring your stop all the way down here to 97.97, just give it some room, let it run, let it work. But that's a nice looking setup, and you can see on the weekly chart, nothing not to like there. Nice consistent uptrend, came back into support, broke out higher, and now it's moving higher again from this daily consolidation breakout. And the final one, WMB, another energy name, really just pretty much breaking out at this point. We're right at that resistance level after this nice gap higher. You could see how it's just consolidated for 3 months almost, and if we do get that breakout, I think under 54.30 or 54.50 would be a great stop, and then you would have the breakout over 58.87. So that's it for the weekend update, guys. Have a great weekend. Make sure to follow me on StockTwits, Twitter, Google+, YouTube, and subscribe to the nightly recap to have all these video links sent directly to your inbox. This way you make sure you're staying up on everything and all the content that I'm putting out. So thank you for watching, and we'll see you on Tuesday.